Good evening, ladies and gentlemen. Today is the 12th of August, and we came in and started the day with a slightly positive sentiment. And unlike the other days in the week, we've been gapping up and getting sold into. We had a minor dip, and from there, a steady up move. IT was extremely strong, and Bank Nifty was more or less made some quick moves here and there, but was range bound. And the Nifty as well did make a considerable up move. So it could have been quite easy to get caught on the wrong side of short covering. And my idea from the beginning was to keep my quantity lower than my other expiries. So it's about like 70% of that, and try to have less management for this position. Mostly because the option premiums are so low that if you try to accept that the risk in the market is the same as what the options prices such as straddles are pricing in, then it might work out really badly in case that goes against you. So when market is pricing in very low risk, I try to keep a larger risk zone. And I hope you had a good expiry, and I will catch you tomorrow. Have a great day. Take care.
Want to meet like-minded traders and discuss option strategies, adjustments and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So it has been more or less flat opening. We've opened just above yesterday's close, and IT has shown a lot of strength in the morning, and Bank Nifty showed a little bit of weakness actually. So that being the case, I initially entered at the 16,200, 16,400 position, and immediately at the open, because of the gap up, big put side IV crash. And I just went over what are my options available, and I'll discuss the same thing here. Right now, the most attractive trade would be the 16,300 short straddle, which has 62 points in it. The problem with that trade is that it's pricing in about, let's say, 50 points in either direction. Even a down move just for a swing will explode the puts, and that's one of the main reasons I'm concerned of being in this trade. And it is very high risk reward, and when market is opening with a 60-point straddle pricing, I have no interest in doing the straddle because the expected volatility is so low that in case it plays out higher than expected, it can be very painful. The second option, how about the 16,200, 16,400 straddle? The problem with the 16,200, 16,400 straddle is, once again, with maximum put side open interest having been 16,200, there's about right now 7.5 and 3.5 in this position. I had the exact same position at the open. The problem is into the down move once again, due to how put options are being priced very quickly. The 15,200 start expanding to about 10, 11, and there really won't be much credit from my call side to balance that. So there won't be any meat left. It'll almost be like being short a naked option. So what is another option? If the straddle is just pricing in about 50 points in either direction, why not sell the 100-point strangle, which is kind of what I did. So into the down move, I moved my calls to 16,350, and into the up move, I moved my puts to 16,250. But that position was just to benefit from a quick IV cool off as soon as there was a little bit of a dip in the morning. So regardless, now what I've arrived with is this expiry, I'm going to take a pennies trade, which is a highly unlikely scenario. So you have massive amount of 16,300 straddles building at 62. You have maximum put side open interest now moved up, I think. Okay, it's just about same amount of open interest, about 62 lakh at 16,300. And then there's good support at 16,250. And I'm taking this safe trade, which is where I'm selling the put option, which is below all of these maximum open interest, right? And even from the call side, maximum open interest is 16,300, quite a large build up at 16,350, and I'm taking the second highest maximum call side open interest, which is 16,400, which almost certainly should be defended, or at least will give enough reaction time in case the market starts moving against. So there's about a little bit more than 8 points in this triangle itself, which is almost nothing. And the hedges that I have purchased cost about 1 rupee 75. So best case scenario, from this position potentially I can get about 6.5 points. And right at the open, from now, this is what I'm gunning for. And the idea for this is, in a low IV expectation, I don't want to be heavily shorting the IV by like essentially having a short straddle position or a triangle which is much closer. This is a little bit of a super duper risk averse approach, wherein you don't want to do anything close to the money. You want to keep your distance. Now, right now, how is a position like this managed? Very simple. If either one of these options doubles, then at least that I will take more credit from the other side, depending on what the momentum is looking like. So if it looks like either one can be breached, then I might even roll those away at a later point. But the simple criteria is, if either one doubles, if the 16,400 call goes to 8, then I will look at taking about maybe 6 to 8 rupees. In that range, I will try to move my put up. And yeah, from there, management is same as always. But until either of them doubles, I am not going to do anything here. Because what can happen is, due to slight fluctuations here and there, one might feel forced to adjust this position, and which really is not necessary. So, being the case, time is 9:52. We'll keep you posted. And for now, yeah, good strength coming from IT. Bank Nifty is now picking up as well. So we're almost at the halfway mark in terms of how much time is left. And yeah, at one point moved up my put to 16,200, and then now moved it to 16,250 to more or less balance credit on my call, because we are having this steady up move, right, during the entire day. Now, there are two things that I'm particularly concerned about. One is, there is 1.35 lakh OI at 16,300 put option, which is mostly been written by people who are short calls. And their issue will be that if now there is an unwinding, this has been traded at an average price currently, I think 22 or something, about 22, yeah, 21.8. Now, if there is a down move, the kind of unwinding that this can lead to, if like even 10% of people in a panic have to exit, this will really explode these puts. So that is one concern of mine. So in case there's a down move, I'll have to get out of the 16,250 put, which I'm short, quite quickly. And right now, if you see, we are trading exactly at 16,350. But if you look at the 16,350 straddle pricing, the market has quite almost a 50% bias to the downside, where the put is trading 50% higher than the 15,350 call, mostly because everyone's expecting that level is going to be protected, and there's higher chance of a down move from there than an up move, which is why this kind of pricing is there. Where will short covering get triggered? If we make a swift like 15-20 point up move, then absolutely these puts will crash in prices, and these calls will rocket, and these calls also will rocket. So yeah, it's not the most comfortable of situations, but because I've been risk off the entire day and my position was spaced in a manner which was compensating much more than the straddle pricing of risk, I'm still in a very comfortable position. And yeah, my idea is these two are trading at roughly about $5 each. My hedge is 1.5, so potentially 8.5. And if either one of these expands to something like 8, 9, I will just square that off and roll that option down in a manner wherein I'm taking risk off in the direction that there is move. Could also happen that because of the way options are being priced, there really won't be much more. Like if you see the 16,300 call, it has only about 2 points of time value. 2 points. Keeps changing 2, 3, 2, 3, like that. This is really not, the market is not accounting for some kind of a big up move. Even now, it's not accounting for an up move. It has high conviction, wherein the call option, which is basically just out the money by 5 points versus put option in the money by 5 points, is trading with a 50% difference, sorry, with a 100% difference, right? So this is 100% more than this. So that being the case, there really isn't that much volatility being priced in. This position should end completely worthless and it should not be much of a headache for me. I'm just right now contemplating what are the extremes. Potential put unwinding, potential rapid short covering on the upside. These are the two extreme scenarios. And yeah, my plan will be either of them expand into 8, 9, get out of it and roll down. Keep you posted. Time is 12:20. We're approaching the halfway mark. And yeah, so far we've been in about a 60-70 point range all day. Okay, IT continues to head higher. And yeah, so that re-rating that had to happen has happened on the 16,350 and put and call, wherein now they're now coming closer to each other more or less, but there still continues to be a downside bias, definitely. But yeah, that being the case, when will these be at threat? When I would think about they're at 8, 9. They do head to 8, 9 on the call side. Since I won't really receive anything for the 16,450 call option. Yeah, since I won't really receive anything for the 16,450 call option, I will instead move up my put option to the maximum put open interest of 16,300. That'll be the only viable thing to do. But now I'll wait though. I'll let this expand even if it does to about 8, 9. I will wait for a confirmation that realistically 16,400 also is going to get taken out, and then I will do it. I don't want to make any changes just into this small 10-point move above 16,350. Now 1.4 crore at 16,300 and 80 lakh at 16,400. The time is 1:15 and basically it's like IT is always doing IT things. People generally trade the Nifty thinking that, okay, you'll have to deal with like lesser of a move, but IT being what it is, it's always IT that's causing problems. Bank Nifty has been nice and smooth the entire day, absolutely nothing happening. Reliance is making a dip to compensate for IT support. That's more or less holding the Nifty flat along with flat Bank Nifty. Currently, this position is the way the straddle is being priced at 16,350. They're really not giving much room for movement. It's pricing in 40. So it's not even pricing in 16,300 on the downside or 16,400. But that should mean that, okay, 16,300 potentially I can take credit from there. I don't want to. There's too much of an open interest there. And I don't want to have to deal with a quick down. Right now, my theory is that we'll either expire here or in between 16,300, 350, right? And it's very possible that we make a quick down move and really screw over anyone who feels like there will be some quick unwinding of this put, but then this put and call both 16,300 might end worthless. So those are the possibilities that I'm working with, and that's why I want to keep my put at 16,250. So yeah, we've got another 1 hour 45 minutes for averaging, and doesn't seem like much else is happening. As averaging is started, I might take a little bit additional credit depending on where it is that we are on the index at that point. So we'll keep you posted. The time is 1:15 and yeah, about 3 points plus slightly, or 3 points of gain currently, and potentially can gain another 7. Okay, this short covering is starting to become a problem. We had a very quick expansion on the calls, and to deal with that, I have moved up my puts because I have no other option. I'll get 2 rupees 50 paisa for the 16,450 call, which 2 rupees 25 paisa, which is really not going to do much. So I have now sold the 16,300 put, finally agreeing to go with the maximum open interest. But the thing is, if we do head down, then IV crash in these calls will give me enough of a reaction time on the 16,300 puts. So that being the case, there is all of this is coming from IT, which is absolutely rocketing. For some time, it was being balanced by Reliance, but now Reliance started heading up as well, and that has absolutely exploded the calls. So that being the case, with 1.5 hour to go, I'm sitting on a triangle which has a 100-point weight. Given everything that has happened right now, I think since I can potentially gain about 11 points, I should be willing to give up at least about 5. So if either of these do expand, I will let them expand till about 11, 12. And from there, I will just cut out of that position and take risk off in that direction. So that's going to be my approach for now. Otherwise, it will be very easy to get played. This will expand suddenly very quickly. It will put on 2-3 points at times and give that up just as quickly. So all of that being considered, my plan now is 100 points, 1.5 hour to go, 1 hour 25 minutes to averaging. Potentially can gain 11 points, so should be willing to deal with a 5-point loss and take an exit at that point.
Okay, so Nifty IT has been trending up the entire day. Now some 2 big red candles on Bank Nifty to shut down all of this, because there was once again here a potential breakout situation just going forever, and these 2 red candles on Bank Nifty have completely mitigated that. That has led to a complete crash in call price as well as put price. So now trailing the stop loss basically by about 2.5 points more or less. There will be slight fluctuations on the individual legs, but I think on the overall position, I'll now trail by 2.5 points. I think it'll be far too difficult and almost unnecessary to now do something to this 16,300 1.5 crore position. It'll take quite a bit now to trigger some kind of an unwinding there. I don't think it'll be possible. So it's very low probability, and not expecting some kind of runoff on the downside. But of course, if one does come in, then be trailing by 2.5, 3 points. Quite glad that I stayed very risk averse today. In a different market, I could have been in a slightly riskier position with larger credit, but I think it was the right call given that there's absolutely no movement being priced in. At the open, the at the money straddle trading at 60 rupees, and you won't be able to manage that. 60 rupees here, you try to protect from the downside into the down move, potentially breaking. That whole thing gets reversed, and it's just straight one-way traffic. So better to stay as risk averse as possible in such situations. 45 minutes to go for averaging, and most likely will hold the same range until averaging. And if possible, into averaging, if we're trading between 16,300 and 16,500, I'll move down my calls, and the other way I'll move up my puts just to maybe collect an additional point or two after we've been into averaging for a while, and it's quite certain that one of these options is going to be OTM. We've got 55 minutes to go for market close, and 25 minutes for averaging, basically 24 now. The at the money straddle is trading for 20 rupees with so anyone who wants to take a directional trade, now is the time. It's 55 minutes to be right on the direction, even partly, and you'll be able to make quite a good trade. My short position has about 3 rupees 50 paisa like that left. So from here, maybe I'll give up a point and a half, worst case scenario, nothing more than that. It's looking like picture perfect 16,350 kind of a finish, which is high probability. And yeah, wherever the pain was coming from, basically Bank Nifty, it is not breaking 35,800, so there is support there. We'll keep you posted into averaging. I'll see if it's going to be a perfect 16,350 finish, then I will not be taking any additional credit either, and we'll call it a day there. Okay, I haven't seen this in a while. The at the money straddle with 45 minutes of trading left to go, 15 minutes to averaging, is trading at 17. You have 45 minutes to be right, and right by just 8 points to not lose anything, with potentially all kinds of gains that can be made. But that's what the market's saying. Market's saying, this is what it's worth, and this is what it's trading at. You think otherwise, you buy it. Even if you buy both the options, you just need a 16-point move from 16,350 to come out of it profitably, even if you create a long strat. We're not even into averaging. We're not even in a situation where like averaging invariably there tends to be sometimes at least a 20-30 point move, but the market isn't buying it. So there's no chance. There's no chance. 16 points also not there. Yeah, pretty intense. This put option still has some value, but most of it is due to the fact that people have heavily shorted this put option. So they have purchased these as hedges. Yeah, so it's a little bit of a funny situation. And I have had expiries where I've straddled into averaging, but generally before averaging, there's at least about 30 points in the straddle so that you can have a stop loss on one leg and exit it and re-enter from the other side and stuff like that. It's there in some of the earliest intraday videos in this playlist. But yeah, this is what is happening. And I'm just trailing my stop loss. If I have to exit this put, it would be at around 3.5. I'll just take the exit. That much I can hold on to it for. So we'll keep you posted. The time is 2:47. And yeah, looking like market is betting very, very heavily on this expiry. Okay, there's 1 minute to go for averaging. Market's conviction is on point because this 16,350 straddle is not going anywhere. And yeah, it has 15 points and a little bit of a call side expansion as we're getting into averaging. Oh, finally, it's trading at 20 now. A good chance it just comes back down still and heads to zero. Regardless, my short position heading into averaging has about 1 rupee 40 pice in it. My hedges will lose 25 pice. And yeah, realistically, I don't think there will be a possibility for me to take additional credit unless, let me see, 5-10 minutes in, if we're firmly trading above 16,350, then maybe I can take the put option credit of 3 rupees. But yeah, this call option, anyone went long in the call option would have got paid well. Now the straddle is trading at something like 20, which is why it just doesn't make sense how it can be so low priced. Like with 50 minutes to go, it was trading at 16 rupees or something at one point. And yeah, anyone who did the long straddle, making some money. Anyway, I will keep you posted if I take any additional credit into averaging. As of now, it doesn't look like I will be. I would rather just wait for the first 10 to 15 minutes. And then if it makes sense to execute the orders and pay the necessary brokerage, maybe if I can get an additional 50 paisa at least, then I will take a trade. Otherwise, not really. I'll keep you posted. Time is 3. Okay, so didn't take in any additional credit, mostly because wasn't anything attractive to do that, to take such kind of a trade and take additional credit. The only opportunity would have been with the 15,350 put option, and really didn't find it very attractive. So yeah, I would have got an additional 50 paisa and not a lot towards the end, especially in bank. They take a couple of green candles pulling the market up. So yeah, should be getting auto squared off soon. I try to place limit orders on both for 10 paisa. If it executes, great. If not, then auto square off time. Okay, I've placed limit orders to buy back at 10 paisa. Let's see if it executes. If it doesn't execute, then we'll auto square off for whatever. Just before auto square off, I'll try, I guess, for 15 paisa also. See, this is trading at 10 paisa, but somehow my orders won't get executed. It must be some long queue. Yeah, look at it. Huge quantity. I'll keep you posted. 5 minutes to auto square off. Oh, so interesting. I think 3:20 is the time when a lot of other brokers do auto square off. So people who have bought and not getting rid of it executed at 10 paisa is the puts. So I won't be charged any extra brokerage for auto square off. I'll try to sell the hedges also, see if I get rid of them for 10 paisa. It's a little too overzealous. That will never happen. The wrong entry. I've set sell order for 0.05 also, even then not executing. I guess it's very OTM. Okay, getting auto squared off now. And done. And no takers for the hedges. And yeah, today the idea was keep quantity lower and pay less for hedging. So today's hedging cost is 63,000, which is fine, I think, to pay at the end of the day. This order book will be available in Telegram, as is every other order book. Yeah, overall the day was okay. That short covering might have burnt in if somebody was trying to get too aggressive with shorting calls. Yeah, thank you so much for watching, and I will catch you tomorrow, depending on if or not I'm trading. I will post about that on Twitter. Take care. I hope you had a good expiry. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.